He turned $60,000 into $1.2 million, then lost it all. You ever see someone win so much that they forget how they started? That was Tony. He didn't grow up rich, no trust fund, no family connections. No one handed him a playbook. Just a regular guy with a steady job and a quiet plan. He worked in sales, nothing glamorous, long hours, unpredictable commissions, the kind of pressure that lives in your shoulders and won't let go, even on weekends. Some months were great. Others, he ate rice and watched the bank app like a hawk. But Tony had one thing most people around him didn't: discipline. While his coworkers leased new cars every time they hit a good quarter, Tony kept driving the same used sedan with the cracked cup holder. While others moved into glass tower apartments downtown, Tony stayed in his modest one-bedroom with the loud radiator. He wasn't cheap. He was focused. Every month, he saved. Every bonus, he invested. Every dollar had a purpose. He didn't talk much about money. People assumed he was just careful. They had no idea what was happening in the background. In his head, there was a timeline, a vision, freedom. Not yachts, not mansions, not Lambos in the driveway. Just the ability to wake up one day and not need to work, to say no when he wanted to say yes when it mattered, to stop counting commissions in his head while pretending to listen to people on the phone. By 32, he had saved just over $60,000. It wasn't flashy. It wouldn't go viral on anyone's feed. But it was real, solid, earned. Every dollar of it had a story behind it. Then everything changed. It started quietly. A coworker, Danny, mentioned a stock that doubled in a week. Tony laughed it off at the water cooler. Then another guy in the office said he turned a few thousand into six figures. In like 3 months, bro. At first, Tony brushed it off. He'd seen hype before. Bitcoin in 2017, pot stocks. Every few years, somebody at work was getting rich on paper for 15 minutes. He wasn't trying to gamble. But then came the lockdowns. Suddenly, everyone was home. Everyone was online. And everywhere Tony looked, people were making money, fast. His group chats were on fire. Social media was flooded with screenshots. Trading apps glowing green. Crypto charts going vertical. Random 22-year-olds posting brokerage balances next to rented exotic cars. And these weren't Wall Street professionals. They were regular people. A barista from Ohio, a college kid in his bedroom, a nurse who started trading on a lunch break, just like him. At night, after work, Tony started watching videos, reading forums, following traders on Twitter with anime profile pictures and 7-figure screenshots pinned to their bios. At first, it was curiosity. Then it became something else, opportunity. He told himself he'd just test it, nothing crazy. He'd risk a little, learn the mechanics, treat it like tuition. He took $5,000 and put it into a few stocks everyone was talking about. Within a week, it was up 20%. He told himself it was luck. Then he tried again. Another trade, another win. Within a month, his $5,000 had turned into $8,000. That's when something subtle shifted. It wasn't just money anymore. It was validation. Tony started thinking, maybe I'm actually good at this. Maybe all those years of saving slowly were the slow path. Maybe this was the real one. Maybe people who were still putting $500 a month into index funds were the suckers, and he just hadn't seen it before. So he added more, $10,000, then $25,000. He wasn't just investing anymore, he was playing the game. And the game was rewarding him. Tech stocks surged, meme stocks exploded, crypto went parabolic. Every time Tony bought, the price went up. Every time he hesitated, it went even higher without him. And that feeling of missing out, it pushed him harder than any feeling of winning ever had. Because winning felt good, but missing out felt like punishment. Within 8 months, his original $60,000 had grown to over $300,000. $300,000! He would sit there at night, on the edge of his bed, the room dark, just the glow of the phone on his face. Refreshing the screen, watching the number go up,
It didn't feel real, but it was. His mom called one Sunday and asked how work was going. He said, "Fine, Mom, same as always." Then he hung up and checked his portfolio, up another $4,000 since they'd been talking. That's when the voice in his head got louder. If you can turn $60,000 into $300,000, what happens if you go all in? He didn't say it out loud, but he started acting on it. He took out a $50,000 personal loan. He told himself it was strategic. Interest rates were low. The market was strong. He had momentum. He could pay it back in months, weeks even, at the rate he was going. He wasn't gambling. He was accelerating. That word made him feel smart, professional, like he wasn't some guy on Reddit, but someone who actually understood capital, leverage, opportunity cost. Then he discovered margin, borrowing money from the brokerage to invest even more. At first, he hesitated. Margin had a reputation. He'd read the warnings. He knew about margin calls. He knew about the famous blow-ups. But then he looked at his track record. Win after win after win. The warnings were for people who didn't know what they were doing. He did. So he flipped the switch. Now his positions were bigger. The swings were bigger. The wins, even bigger. $10,000 days, $20,000 days. Once, $40,000 in an afternoon. He remembers walking into the kitchen that day, opening the fridge, staring inside, then closing it without taking anything. He just made more in a few hours than he used to make in 6 months. And his first instinct was nothing. He didn't know what to do with himself. It felt unreal, like he had cracked a code that most people didn't even know existed. He started checking his portfolio first thing in the morning and last thing at night, sometimes in the middle of the night, sometimes during meetings with the app hidden behind a slide deck, sometimes at red lights, even though he told himself he wouldn't. It consumed him. His job started to feel small, pointless. Why spend hours chasing commissions, smiling on calls with people who didn't respect his time, when he could make more in a single trade than he made in a quarter? He started snapping at coworkers. He stopped going to lunch with the team. He'd sit in the parking lot during breaks, headphones in, watching charts, mouthing curses at red candles. He didn't even notice it at the time. Then, one day, it happened. His account crossed $1 million. 7 figures. Tony just stared at the screen. He didn't move, didn't celebrate, didn't even tell anyone right away, because part of him didn't believe it. He took a screenshot, then another. Then he closed the app and opened it again, just to make sure the number was still there. It was. A few weeks later, it peaked at $1.2 million. That's when everything changed. Now he started talking about it. Not publicly, but with close friends. He sent screenshots in the group chat with a single word, bro. He started saying things like, "I might step away from work soon. I'm thinking I'll do this full time. I might take the family on a trip, like an actual trip, not a weekend at the lake." He looked at houses online, ran numbers on a beach condo, imagined a completely different life. One where he didn't set an alarm. One where his time belonged to him. And here's the key moment, the moment that defined everything that came after. He didn't sell, not even a portion, not $100,000 to lock in, not $50,000 to pay off the loan, not a single dollar. Because in his mind, this was just the beginning. Why take money off the table when you're winning? Why slow down when everything is working? He believed he was building something bigger. He believed he understood the market. He believed he couldn't lose. That last belief is the dangerous one. It doesn't show up as arrogance. It doesn't feel like ego. It feels like clarity. Like you've finally seen the world the way it actually works, while everyone else is still asleep. And clarity doesn't sell. Clarity holds. Then the market changed. At first, it was subtle. A few red days. Nothing unusual. Tony had seen dips before, and every dip had been an opportunity. So he did what had always worked. He bought more. But this time, The bounce didn't come. Prices kept falling. His $1.2 million dropped to $1 million, then $900,000. He told himself it was normal. Markets don't go up in a straight line. Pullbacks are healthy. Strong hands hold. He'd read those phrases 100 times. Now he repeated them to himself like a prayer. Then it dropped to $700,000. Now he felt it. That tight feeling in his chest. That quiet voice saying, something's wrong. He stopped sleeping well. He started waking up at 3 a.m. to check the Asian markets, then again at 5 to see Europe, then again at 9:30 when New York opened. His shoulders lift up around his ears. But he ignored the voice, because selling would mean one thing. He was wrong. And after everything, after all the wins, all the screenshots, all the half promises he'd made to himself and to other people, being wrong wasn't a possibility he was ready to accept. So he held. Then he added more leverage, more risk. Not because it made sense, but because he wanted to get back to the peak. That number, $1.2 million, was stuck in his head. Anything below it felt like a loss, even though he was still massively up from where he'd started. That's how the psychology works. You don't measure from where you started. You measure from the highest point you've seen, and anything below that feels like failure. A man who started with $60,000 should feel rich at $700,000. A man who touched $1.2 million feels broke at $700,000. Same account, same person, different brain. Within a few months, his account dropped to $500,000. $500,000. Still life-changing money. Still more than he had ever had before any of this started. But it didn't feel that way. It felt like he had already lost $700,000. So he kept going, trying to win it back, trying to force the market to do what it had done before. He started taking trades he wouldn't have taken 6 months earlier. Bigger size, tighter time frames, plays based on tweets, not on anything that resembled a thesis. The environment had changed, and Tony hadn't. Then came the breaking point. A large portion of his portfolio, almost 40%, was in a high-risk crypto project. It had been one of his biggest winners on the way up, so he trusted it. He believed in it. He'd read the white paper twice. Followed the founders on Twitter. He could explain the tech to anyone who asked, and a few people who hadn't. He ignored the warning signs. The insider wallets quietly moving, the exchange withdrawals slowing down, the forum posts that used to be hype now turning into questions. Then, overnight, everything collapsed. Liquidity issues, panic selling, a cascade of liquidations that fed on itself. The price didn't just drop, it fell off a cliff, down 80%. Tony woke up and checked his phone. He thought he was misreading the screen. He refreshed the app, again, waiting for the number to correct itself. It didn't. In a matter of hours, his account dropped below $100,000, from $1.2 million to under 6 figures. Just like that. He didn't move for a long time, didn't panic, didn't scream, didn't even cry, not yet. Just sat there on the edge of the bed, in the same spot where he used to refresh his account and feel like a genius. Staring, trying to process what had just happened. All those months, all those wins, gone. Not completely, but enough that it felt like starting over. And maybe worse than starting over, because now he knew what it felt like to have it all and lose it. The loan was still there. The margin had to be paid back. The stress didn't disappear with the losses. If anything, it got worse. Because losses don't just take your money. They take your sleep. They take your appetite. They take the way you used to look at people you love and feel okay. He stopped checking his phone obsessively. Not because he was healed, because he couldn't stand to look. 2 weeks in, he sat down with a notepad. Wrote down what he owed. Wrote down what he had. Wrote down what he made at his job, the one he'd almost quit. The numbers were ugly, but they were honest. For the first time in a long time, he was looking at honest numbers. He went back to work the next day. Same desk, same coffee, same headset. A coworker asked if he was okay. He said, "Yeah, man, just tired." He didn't tell anyone for a long time. Tony didn't quit investing, but he stopped chasing. He paid off the loan. It took longer than he wanted. He picked up extra hours. He sold the nicer watch he'd bought during the run, the one purchase he'd actually made when he felt invincible. He closed the margin account. He simplified everything. No more high-risk trades. No more all-in plays. No more trying to time the market. Just steady contributions.
Index funds. Boring, predictable, automatic. Long-term thinking. It felt slow, almost insulting at first. After what he'd seen the market do, after $40,000 afternoons, putting $1,000 a month into a total market index felt like riding a tricycle after driving a Ferrari. But over time, something happened. His portfolio started growing again. Not explosively, not overnight, but consistently. And this time, it felt different because it was built on something real, not momentum, not luck, not a feeling that he'd cracked a code. Discipline, the same thing that got him to $60,000 in the first place, the thing he'd abandoned the moment he started winning. Years later, Tony isn't a millionaire again, not yet, but he's stable, focused. He sleeps through the night now. He eats lunch with his coworkers. He answers his mom's calls without checking his phone in the middle of them. He still invests every month. He still has goals. He still wants freedom. But he doesn't confuse a winning streak with a personality trait anymore. And when people ask him what happened, he doesn't blame the market. He doesn't blame crypto. He doesn't blame bad luck. He doesn't blame the influencers or the platforms or the timing or the Fed. He says something much simpler. I didn't lose money because the market crashed. I lost it because I thought I couldn't. And that's the part most people miss. It's not the market that destroys people. It's not volatility. It's not leverage on its own. It's not even greed exactly. It's what success convinces them to believe about themselves, that they're different, that the rules apply to other people, that their wins are skill and their losses are bad luck, that the next move is obvious because the last few were. The market doesn't punish you for being wrong. It punishes you for being certain. Because the fastest way to lose money is to think you figured it all out. And the moment you stop respecting how easily it can be taken from you is the exact moment it starts leaving.